Whether you have $100, $500, $1,000 in your account, or if you have 50 grand, 100 grand, I'm gonna go over tips on how to grow a small or a large account. And I've made videos like this in the past. I will continue to make these videos because everybody that listens to my advice and does what I say starts seeing success and start seeing consistent profits and improvements in their trading. Now on my Instagram, at InvestaTrade, I'm gonna post a link in the description below if you wanna follow it. A while back, I made a post about growing a small account, focusing on trading SPY and QQQ. And in this video, I'm gonna go over these points in detail. I definitely recommend everybody to follow me on my Instagram. Again, the link will be in the description below. Some very, very good trading resources on here. But why I recommend everyone to start trading SPY and QQQ and mastering them is because you get to learn their personality. They are the markets themselves. You get to learn how they trade, the volatility, very good chart patterns, and basically you master these two instruments and become a better trader solely focusing on the S&P and the NASDAQ. I know traders personally on Wall Street that only trade these two names and they are 8-figure a year traders. I even know some guys on Wall Street that strictly trade oil, strictly trade gas, and they are also 8-figure traders. The best traders reduce their focus, they limit it to a very small amount of names, and they master them, such as the S&P 500, SPY and QQQ, or ES and NQ. Remove all of the other noise. You don't have to scan for stocks. You don't have to look at the top gainers. You don't have to look at the most volume, best breakout names, or what everybody's talking about. The S&P 500 and NASDAQ are the best names to trade in my opinion, and everybody that listens to this could also agree with that as well. So on the left over here, we have the ES/ES. If you've seen my other videos, this is always what I'm talking about, the S&P 500 E-mini futures. And then on the right, we have SPY, which I'm sure everybody's familiar with. This is the S&P 500 ETF. These are both related to the S&P 500, and if we look at the charts, they are completely identical price action, both up and down. Although they do have different prices, that's irrelevant. The price action is the same. Same applies to the NASDAQ. On the left, we have /NQ, the NASDAQ 100 E-mini futures, and the price action is identical to what's on the right side of my charts on the QQQ, which I'm sure everybody's heard about, which is the NASDAQ ETF, Invesco QQQ. Price action is identical on these names. With that being said, we can either trade futures on ES or NQ. Everybody hears the word futures and they think it's very complex. It's for professional traders and you need a lot of money to trade it. Those that trade ES and NQ, specifically in the current market conditions, in my opinion, is going to be more consistent and easier to trade with less emotions, proper risk management, and simple organic price action. So trading futures on ES and NQ is very beginner friendly and it's very small account friendly. The reason for this is there is no PDT rule. Although you need a margin account to trade futures, if you specifically trade futures on a margin account, there is no PDT rule and you are not restricted to a certain amount of day trades in a week period, and you are not going to be subject to the pattern day trader rule. You could start trading futures with as little as $500 or $1,000. Everybody pulls up, let's just say the S&P 500, they see it's at 3,700 and they think it costs 3,700 to buy one contract. Well, with futures, you are trading on margin and you could trade as little as $55 if you trade the micro contracts, or as little as $500 if you trade the regular ES contracts outright. I'm going to post in the description below the previous video about futures versus options. And futures trading is very, very beginner friendly. In fact, I find it easier to trade for beginners because you could practice and implement proper risk management. So check out the video in the description below. I just recently posted it. But nothing wrong with trading options that you use SPY and QQQ for. And if you use a cash account, there's no PDT rule and there's no $25,000 minimum with a cash account trading options. It's really up to you and what you want to trade. But to sum up this video so far, trading the S&P 500 or NASDAQ only, whether you trade the futures or the options, is the best way to grow your account for consistency, and for profitability. Now, why this is because these names are highly liquid. They are the markets themselves. When everybody's referring to the market, a lot of people are referring to the S&P or even the NASDAQ. So they're extremely liquid. In fact, they are one of the most liquid markets in the world, which makes it very trader friendly. And because of this, they work extremely well with supply and demand imbalances, which is the basis to my trading strategy. In fact, they work the best with supply and demand zones. And because of this, price and volume is all you need. They are the only indicators you need. You don't need fancy charts. You don't need to read the RSI, MACD. If it helps you, go for it. But as a beginner, especially if you're looking to grow your small account or large account and build consistency, focus on trading supply and demand zones with price and volume analysis, trading ES or NQ, SPY or QQQ, and remove all of the other noise from your trading and from your charts. Highlight everything that I've been going over so far. Today I was able to make $8,275 off of the S&P 500, trading price and volume using supply and demand zones. To gain context, let's go over the pre-market plan. I post these every single day in my Discord, specifically every single day on the S&P and the NASDAQ, of setups I'm watching, levels I'm looking out for, and potential trading scenarios. On the S&P on October 21st, scenario number 2, we are watching this 3643 demand zone over here. Scenario number 2 was if we can rally out of this level, I need to see a strong push above 3675 to 85, which is this gray box over here. If we can get above this, I will be interested in playing longs for continuation into 3715, which is this pink box near the highs over here. Again, these are all levels of interest, and we use price and volume to gauge what the market does at them. If you trade futures, it enables you to trade when the market, specifically the options market, is closed. So about an hour before the market opened up, we hit this demand zone perfectly according to the pre-market plan, and we rallied. If we trade the futures on the S&P 500, we would have been able to capitalize on this rally to the upside. And if you trade options, you would have had to wait for 9:30 Eastern to hit and the market to open up, because that's when the options market will fully open. So now the market opens up, very strong buying volume above our 3675, 3680 level. The market consolidated, then we pushed up, very, very strong buying volume, and then the market pulls back. And now this area over here acts as a demand zone or an area that I want to be supported if the market does pull back. We held this gray box, so we broke out above it. Now it acted as support. This was my entry to get in the market long. And then I used the supply zone above as a target. And I could say that the market may gravitate towards this level as it's going to act like a magnet to the price. Now on the left, we have the S&P 500 chart with the levels I just said. And on the right, we have the SPY chart. They are identical. Now, if we want to trade the options, what we're going to do is we're going to pull up the options chain and we're going to see a large amount of different options to play. In this case, when the S&P 500 was breaking out and testing this area, SPY was around 367. So playing it safe, let's just say we play one out of the money SPY calls, which are the 365 calls, copy them, and now paste them into the chart. At the time the S&P 500 bounced and rallied off of our level, broke out to the upside, that was around 3685, and the SPY 368 calls were around $1.50. To the high of this chart, they went to $3.55, which on SPY, that would have been a 146% return in about 20 minutes time, whereas the S&P 500 went up 30 points. If we were trading one micro E-mini contract, 30 points, $5 per point, this would have gained us $150 per contract of the micro E-minis. We trade 10 contracts, it would have made us $1,500, or we trade one ES contract, 30 points would have made us $1,500 per contract. And the options also up 146%. So very clean price action. It depends on what instrument you want to trade. One thing you notice is my charts are completely naked. All I have is price, VWAP, and volume down here with supply and demand zones. Those are the only indicators to truly tell you the true story behind the market between the auction of buyers and sellers. The market moves just like any other auction moves. Buyers are buying, sellers are selling. So if we can read this auction via true organic price action, this is going to give us our edge, specifically trading ES and Q, SPY and QQQ. The S&P 500, again, we were bouncing off of our 3685 demand zone, which is this green box over here. As long as we could bounce and remain above it, I'm going to be focusing on longs, targeting 3740, this pink box over here. The market hit this demand zone overnight, rallied. Then we also created new demand in this area over here. The market before the open pulled back into it and had a very large rally right into our 3740 level. Again, simple, clean analysis, focusing on one thing right in front of us and removing the other noise. This trader in my community finishing out the week up $3,600, trading only futures on ES. Supply and demand is insane how effective it is. Feels confident going into the trades. My advice is to understand supply and demand, how to chart zones and levels, and then learn what price does with volume. Do not overcomplicate it. You don't need a bunch of fancy indicators. They will just muddle your view. Very nice gain on the account. This trader switched to trading futures using supply and demand 9 days ago, and the funded account is up 3,000, up 100%. Simple approach, let trades play out, defined risk to reward. This trader traded 4 micro E-mini S&P 500 contracts, only 4 contracts with a 7-point risk, and made a $315 profit. This trader finding consistency, strictly trading futures, and limiting himself to 1 to 2 trades a day. Process over profits. Less is more. You do not need to take 20 different trades in a single day. Focus on quality setups. This trader, you could trade SPX with this strategy as well. It's the same instrument. $1,300 profit. Jeff traded 3 days this week. His account is up 9% following zones, price action. Another trader up 36%. Everybody that follows the process is going to become a consistent trader in the long run. When you switch up your approach, you focus on less and you focus on what truly moves the market. That is what's going to matter the most. And that's when you're going to see consistency and your account grow, as long as you can manage your emotions and manage your risk. And trading is the most scalable business you are going to find. What I recommend everybody to do, if you're a beginner, start off with 1 to 3 micro E-mini contracts of ES and NQ, which is /MES and /MNQ. They are the micro contracts, which is a tenth of the value of the standard E-mini contracts. Very, very small risk, very small capital needed up front, and you can manage your risk well. 1 to 3 SPY or QQQ options. If you go the options route, start small, then you could scale up. Once you are consistent, you could prove yourself. You've built an edge, you've learned your emotions, you've built a system, you know how to trade. Once you're consistent and you could prove that to yourself with such small size, then you could scale up to more contracts. All you have to do to make more money is increase your position size, following the same exact process. There's no difference. Instead of maybe buying 1 to 3 contracts and you're consistently making 3, 4, 500 bucks, all you got to do now is maybe buy 6 to 10 contracts, and now you're consistently following that same process, but now you're making, let's just say, $1,500 per trade. Start small, scale up once you are consistent. That is how you avoid blowing up your accounts and losing while you are learning. Stop trying to hit home runs. Consistent base hits add up, and it's very easy to do this with the S&P and with the NASDAQ. Work smarter, not harder. You don't have to get a large move. Start small, base hits add up, and work smarter. You don't have to try to catch the biggest move to make more profits. All you have to do is scale up. Detach yourself from the money and focus on the process. Everybody that you just saw that was making money in the last few slides are process-oriented and process-following traders. And if you focus on the process, the money will come. Believe me on that if you take any of my advice. But I'm going to end it on that note. Drop a like, comment if you have any questions, and definitely check out the links in the description below. I'm ending it. Peace out.